you first introduced to the markets, to technical analysis? What was that like for you?
Well, interestingly enough, in junior high, high school time frame, my dad started to get very interested in the market and the on-balance volume in particular.
Okay, right.
And so I was using a ruler and a calculator at the time and a pencil to write in what the volume was for the Dow 30 and then actually do the math so that we could get what the on-balance volume was.
Right.
And so I did that with him every day. So that was kind of my first introduction to technical analysis, junior high, high school. And being a math person, it was very much interesting to me. So
was it the mathematical part of it that drew you to it, or what was it that clicked for you, or was it forced by your father to?
Oh,
be
no.
Okay, good.
No, I love math. I mean,
Yeah,
math is
yeah.
kind of my background, and
Yeah.
I love numbers.
Yeah.
And so it seemed a very natural fit. I didn't understand it very much at first, but honestly, we were using pencils and graph paper to do charts, so it was kind of different back then.
Right? So when about was this, not to age you in your career, but when about was that, when you were doing that by hand?
Oh, goodness. So that would be, the early 80s.
So so you obviously continuing to do this for, a whole career now. How has the practice changed for you from that initial introduction where it's graph paper and rulers by hand to what you're doing now, which is a fairly sophisticated process of data crunching and all of that? I mean, what is that transformation been like?
Right. So a lot of that transformation, to be perfectly honest, a lot of that happened when I was a little bit out of the business because of my career and schooling.
Right.
But when I got out of the Air Force, I started to help my dad. He was ready to start the company. And so I was helping him get the company off the ground, and he was doing charting using Excel for a while. And then he met Chip Anderson at StockCharts.com,
and the rest is
history. So I really became involved when we were starting off DecisionPoint, and we were emailing, number reports, Excel spreadsheets basically was what we were selling, and we didn't do a whole lot of commentary back then.
Right,
it was really all about the charts and numbers. And if you ever saw the old DecisionPoint.com, you would know it was all charts and numbers. People would go to our homepage, and it was just we didn't do drop downs or anything like that. It was just all on one page. We would get subscribers, and they would just be like, "What?
What's happening?"
Wait a minute, what am I supposed to look at? I don't even know.
Yeah.
So it was, the transition to StockCharts was actually very hard for our subscribers and us at first.
Right.
I mean, I had to get a tutorial from Chip. That was back when they did StockCharts University. And yes, went up to Canada and learned the platform, which is very different, like I said, from Excel, which we were using.
Yeah.
But that's kind of how the transition was going for me, during that time. And I mean, what did you see when you were coming up?
So what's interesting is I wasn't really introduced to the markets until college. So I actually I studied music, and I took a job. I needed money because music was great for the emotional benefit of what you did, but in terms of your income stream, it was volatile. It was like the VIX of income, right? So you'd have great weeks, and then you were living like a pauper the next week, and that I was kind of done with that. So I found a company, Bloomberg in New York, that would hire liberal arts majors, and I knew laughably nothing about the markets before I went there. But when I learned about technical analysis, it was one of those things where it just clicked. And for me, it was less the mathematical side, which was interesting, but it was more the psychological side.
Yes.
So the fact that you had a toolkit that would help you understand how other investors were thinking was really interesting to me. So, when I think about what you guys do at DecisionPoint, it's a lot about, it's really trying to dig into the sentiment of investors and what investors are doing and how that's reflected in price and and sentiment readings and survey data, but it's really about how price represents what investors are thinking. And that's what's always kind of drawn me to technical analysis, I feel like.
So are you a technical analysis purist or not?
Ooh.
I am.
Yeah.
For better or worse.
So what does that mean to you,
Yeah,
to be a
so
technical analyst
to me,
purist?
everything is baked into the chart.
Oh, I like that.
I
Okay.
do pay attention to fundamentals in terms of earnings, dates, and things like that, but to me, everything is on the chart. So I'm all about the charts, which for better or worse, and some people say for worse, and I say it's for better, but it really gets me focused. And again, with my math background, I mean, that's really what interests me is the numbers on the chart and how you can determine so many things just from that.
I like it. So I would agree with you, because I think a lot of investors that would probably not describe themselves as purists, they get themselves into a ton of trouble, because if you analyze the company and you analyze the 10 Qs and you analyze the economic conditions and then you look at the chart and you have all of that in your brain while you're looking, your analysis starts to get a little cloudy, I would say, right? And you're opening yourselves up to all sorts of mistakes on trying to get the chart to tell you something you want to hear. And your process, which I would totally agree with, is starting with the chart and recognizing that the price reflects probably most of what you need to know, right?
Certainly, emotion. A lot of people don't think about that, but the emotion of the stock or whatever you're looking at is reflected in price.
Yeah.
You know, if the stock drops, 25% in a day, that reflects the emotion that is behind the concern, the worry, and that sort of thing.
So, Erin, it is time for what I love, my favorite question, the worst call question, right?
Right.
What was your worst call, worst trade, or maybe to put it in a less painful framework, what was a good learning experience you had as an investor? What comes to mind with that?
Well, certainly. So fortunately, I don't have to say, well, I bought something and it dropped 50%. That wasn't really my worst trade. My worst trade, honestly, was selling way too soon. And that would be on Etsy.
Ooh,
I bought Etsy at like $12.
Right.
Back when it was
point.
my call. I told people on the Market Watchers program that we used to do, I was like, yes, Etsy, I think Etsy's going to do well. And everybody was like, and it did. It got up to like, $30-something. And I thought, well, this is perfect. And I sold it. And then, you get involved in a lot of other things. Back then, I wasn't really concentrating on stocks. I was more the major markets. And so when I was trading my own account, I'm somewhat risk averse. And with age, that gets more and more. And so I was like, well, I'm booking profit. That's what I tell everybody else to do. I'm booking that profit. Well, of course, now what is it, at 150 or whatever it was. So I always think of that as my worst trade. But how about you?
I have a number, sadly, that I could pick, but I think the one that probably comes to mind would be turning bearish in 2013, and I remember it vividly. I came into the industry in 2000, and so my introduction to investing, the technical analysis toolkit, everything that I was learning was 2000, 01, 02. That was like the sweet spot. So secular bear market, the unwind of the tech bubble, like I learned that everything that had been going up goes down. In 2007, I felt like a rock star genius when I was bearish. Sure enough, we rolled over. I'm like, no problem. 2013, I remember it exactly. We got to the same level, and I'm like, and we're bear. I'm like, here, obviously, we're overextended. We've had this great run. And I remember at Fidelity, the head of the trading desk called me Dr. Doom. And that's when it hit me, when he referred to me in someone else was like, well, Dr. Doom, it turned negative. I'm like, oh, this can't be good. Like, this is not, I'm going to remember this as being a bad thing. Right. Sure enough, the market just continued higher. And that painful lesson taught me a lot about how to deal with the next, 9 years, which have been overall this consistent uptrend. And it's a reminder to just not, I mean, it's funny, both of our lessons are not to turn negative when something's worked so much, right?
Exactly.
Isn't that funny? That's a consistent answer.
Yes, we've been known at DecisionPoint as perma bears.
Yeah.
Well, at least my father. I've had a lot of people tell me I'm a perma bull, but I think they've changed their mind as of late. So.
Well, the world's changed quite a bit, right? And I feel like if you've recognized that going into 2002, it's been a shift in a lot of ways, right?
Absolutely.
Yeah, very good. Okay. All right. I would say, Erin, by any definition here, we're recording this in May of 2022, clearly a bear market phase to some degree, right? Whether it is a short-term painful bear market or a something even more significant. you know, you and I both have sort of weathered some of these before, and I feel like a lot of newer investors have not experienced when markets roll over to the degree that they already have, and we may not obviously be done. How do you sort of navigate a bear market phase like this? What advice do you give people to try to, you know, get through this emotionally?
Right, it's very tough.
With your portfolio intact, what do you do?
Yes, and so many, you're absolutely right. I mean, think about all of the Robinhood and, you know, all these new, the 2020, you know, with that crash. So they're thinking bear markets last a month. Yeah, no. We, being a little more seasoned, have
Our
lived.
tenure has,
we've lived through a few,
yeah, that's true.
And so we know that what we experienced in 2020 was not typical.
No.
So, you know, when you're going into these bear market phases, certainly there are what we call pockets of strength. But really, what I've been telling investors, what I do, I'm not a registered investment advisor, so I don't do recommendations. I tell them how I'm doing it. I actually tell everyone my exposure level in every report I do. And so my thing to them is like, limit the exposure. You know, I've been in the 10 to 20% area now for weeks. And it kills me. I want to be in. I want to be in so bad. But I know from my process that being on the buy side now is just so risky.
It's tough.
Unless you're going to really have those hedges, those inverse funds. You know, you just have to be patient. You know, we do get little bear market rallies, but don't get fooled. You know, this is a long, drawn out process. It's usually not a 1 month kind of thing.
No.
I mean, have you found that?
I always describe bear market rallies as being three things. They're sudden, severe, and seductive. Right?
Yes.
They happen so quickly. And just, I mean, in the early days of 2022, we've seen a number of them where it goes violently up. And what concerns me is how quickly I hear people turn super bullish. Like, all right, that was it.
Yes.
And I think trying to call a bottom in this sort of environment is not a great, it might be something fun to do as like a water cooler discussion, but in terms of actually managing your portfolio, it's disastrous. And I think the time frames that can be involved with bear market phases is really helpful. For a lot of newer investors, their experience with bear markets has been, you know, 2020, early 2020, which was pretty short. Maybe before that, late 2018, which wasn't that long.
Right.
I mean, there's just these short kind of blips. But if you really look back to 2007 to 2009, 2000 to 2002, not that we would necessarily see a repeat of that, but it shows you how long and how painful some of these can be.
Absolutely.
And it's funny, I remember when I was at Fidelity in the chart room, we had this chart of the Dow going back for decades. And one of my favorite exercises was to show how long the bear market of the 1970s, the secular bear market of the 1970s, occur, right? It took forever, right? And the Dow first hits 1,000, and then 16, 17 years later, whatever, in 1983, it finally breaks out again. They can be painful. And again, not that we are necessarily experiencing that now, but it's a reminder that we are so short-term, I think, in a lot of ways, particularly in younger investors, right? Which is concerning to me.
Right, and the 70s, I think, is a really good example of the situation we're in now, because it was the same thing, high inflation, high oil prices, you know, there was a lot of global unrest. So we know how long that one took.
And it's funny, I know when I started in 2000, and I was learning about the markets and was struggling because everyone told me when I got hired, investing's easy because tech stuff just keeps going up, and all of a sudden that totally changed. A couple people pointed me back to history and said, read up on the 1960s and the end of that, the go-go years, and look at what happened during bull markets. And I would remind people now, don't just focus on where you've been investing, like learn the lessons from the Erin Swenlins and others, and even before the Carl Swenlins and the early practitioners, Edwards and McGee, John Murphy, who have seen some of these periods, and actually look at what the evidence told you then, because I think you can, there's a rhyme to the markets, a lot of times, right?
Well, and the good thing now is we have all these technical indicators. That we didn't have then.
That's true. So. Great tools to apply to these markets.
All right, Dave. I'm going to ask you what your favorite indicator is. But before you start,
Yes.
I have to tell everybody mine,
Okay.
which, if anybody knows me and my dad should
Yeah.
know what it is. And that would be the price momentum oscillator.
PMO.
The
right?
PMO, available pretty much only on StockCharts, I believe.
I believe that's
but we developed that. We wrote that indicator. We created it. So it's an easy one for me. But what's
Yeah.
your favorite indicator?
This is a tough one because, I mean, like you, I think both of us have spent a lot of our time, a lot of our careers educating. And so for me, that's been being able to talk about a lot of different things and different indicators. So I kind of have a broader toolkit probably. It's tough to say a favorite, but I would say in this environment in particular, it's got to be relative strength, right? It's got to be looking at a stock or an industry group or an ETF versus everything else. And that, I didn't really appreciate how important that was until I spent time at Fidelity and you were managing long-term assets, right? You're managing mutual funds and thinking about long-term trends, and it was all about a relative game. And when the markets became completely disconnected, when it was super choppy, it was all about what stocks are outperforming, what stocks are doing better. And I remember vividly charts that started to work, utilities just working in 2014. I'll never forget it. And it was like, I felt so well equipped as a technical analyst where people were debating what should work, what might work.
Right.
And I was like, utilities are going up, and here's the evidence, right? REITs are working.
Yes.
And I think especially now, you think about energy, and you could, was it easy to predict how well energy outperformed? Maybe, maybe not. But at some point in the last 8 months, you hopefully caught on to the fact that energy was working, right? Consumer staples starting to work, healthcare is starting to work, and I think relative strength tells you so much about where the opportunities lie in an uncertain market for sure.
Yes, and it has to really have relative strength, right? Because
Yep.
if your benchmark is the SPY
Yeah.
and it's going down, you can still have relative strength line moving for you to the upside,
Yes.
but the stock is, basically going down slower than
Right.
everybody else, than the benchmark, right? So
It's bleeding less than other things,
Right.
but in some environments, I think that's the game, right? I mean, that's how you perform well or do better than a passive investment product as you focus on being in parts of the market that are working better and having a good process of leaning out of things that aren't working and leaning
Right.
into things that are working. So
Right.
I think that's a great lesson for a lot of investors. All right, so Erin, I know I talk to a lot of our viewers at StockCharts TV about their routines, and I find a lot of new investors have undisciplined use of their time. They're kind of just doing a bunch of different things, and successful investors that have had a good track record, people who have had a good career like yourselves, tend to have a pretty well-established routine. You have certain things you do. So tell people, how do you approach the markets? Are there certain things that you do every day, every morning, every week? Like, what does your
Yes.
process of doing things consistently look like?
Right. So typically my mornings are all about, okay, what's the market doing?
Okay.
And we are West Coast.
Yep.
And that means I'm not up at the market open.
Right.
Okay. Anybody who knows me, I am not a morning person. Getting up for my trading rooms to do those at 9 a.m. is
That's a
a
big
challenge
ask,
sometimes.
right?
Sometimes a
Okay,
challenge.
okay.
So my first part of my morning is reading up on the articles, what's on the internet and
Yep.
what people are saying,
Yeah.
obviously looking at the charts.
Yep.
Trading room mornings are, obviously I'm getting a really good look at stocks in particular.
Yeah.
But in the mornings, it's like, okay, first you look at, your SPY chart. I
Yeah.
look at, some of the basics. But my indicators, most of them don't update till after the close.
Got it.
Well after the close. We get all of our indicators pretty much up by 2:30, 3 o'clock.
Okay.
So between that time in the mornings when I do all of that is honestly, it's my downtime
Yeah.
because I end up working kind of late because I start so late.
Yep.
And so during the mornings, that's my time to just sort of check into the market and really just focus on what I'm going to be doing in the afternoon and
Yeah.
getting all that data here and there pieced in during those few hours in the morning. But
Yeah.
once lunchtime hits, okay, I have my chart list that I go all the way through. It's got
Right.
all of my indicators. Okay, short term, intermediate term, climax analysis, Bitcoin, and I have all of the asset classes that we cover.
Yes.
And so I go through all of those, and then I'm ready to write my DP alert.
Yep.
I do my scans so that I can get the stocks out of those areas with relative strength and present those to my diamond readers. So I get kind of the overall market, and then I go into those individual stocks.
Got it.
And then I make my plan for the next day. If my portfolio, that's kind of what I do in the mornings, is my own portfolio,
Yeah.
kind of check the noise, which I shouldn't be doing. So it's fairly methodical, but
Yeah.
because I am kind of a laid back person, I kind of listen to my mind and
I like that.
where it really is, when it's ready to focus. So
Yeah, right. Well, it's funny that I think that's actually pretty wise that you're structuring your day around how you're actually wired, right? I think that the successful investors that I've worked with have a good sense of how they should approach things, and it's really their own. It's their own process, and my process probably should be very different than yours because we're different people, and that's okay. For me, I have what's called a morning coffee routine, and I always describe it as you get the cup of coffee, you sit. Now it's getting kids ready for school and things like that, but then sit down, and for me, I'm sitting down probably around 7 a.m. Pacific, which is around 10 a.m. Eastern, so both of us are kind of looking after the open, which I've found so valuable the last couple of years now living on the West Coast, of not being too excited about. I used to spend so much time worrying about the open and just how things were going, and now it's when I start looking around 10 a.m. Eastern, it's like things have kind of settled down, and then you actually get a sense of what's going on. It strikes me as you're talking about that, Erin, that I know for me, doing a show every day has been a great upgrade, I feel like, to my own consistency, because it's forcing me every day to have a consistent process and to think about what I want to share with people. I think of as a prolific content creator. You're writing stuff or doing something kind of every day. What has that meant for you, sort of that need to publish or that need to produce something? Doing your trading room, how does that help keep you honest with your routine?
Well, and certainly it's interesting because when I was doing the Market Watchers for StockCharts for, 2.5 years, I think we did it with Tom Boley, and I had to get up way earlier than I liked to do that, and for some reason it kept getting earlier and earlier that we had to show up, but that was really good, right? Because I was immediately involved in what's going on in the market. I had to know everything. And then the writing wasn't quite as prolific back then because the focus was really on the video content. Since then, I've switched over. I'm back to concentrating more on the writing. And because of that, that does really set my routine because I have to get these letters out every day. And it does make you more apt to follow a routine. And then, of course, I do outside presentations. I do, DecisionPoint show on StockCharts TV. Involved in some of the special projects you guys do for SCTV. And then the trading rooms. The 2 trading rooms I do a week are probably my favorite thing that I do.
Why is that?
I absolutely love it. I love being there and interacting with people. I'm in an office all by myself. I don't interact with a whole lot of people. And it's kind of great, right? Because nobody can talk back. So I get to talk the entire time about whatever I want. No, not whatever I want, but I do these symbol requests. And so I get to look at these charts cold and have to have something about it every time. And it's just this great training for my mind to be able to throw those charts up, and then look at them cold and be able to give my analysis. And it's really honed my trading process in the meantime. I love the trading rooms.
I love it, and it's a great. I've been on your trading room. You were kind enough to invite me, and it felt like just a really fun conversation with a bunch of people that were asking about things. It was a lot of fun.
One of them is free on Mondays.
That's right.
So the Friday one is only for my subscribers, and a lot of people subscribe simply to get that trading room on Fridays. It's great.